questions from the book. So first question, that is question number 5, page number 1.99. The question says, this is based on profit and loss appropriation account. Now the value based as it is given in the book are no more in our syllabus. So the question says, after completing the MBBS, Amit and Ruchi decided to open a hospital in a locality of Delhi inhabited by low income group people. Due to inadequacy of funds, they persuaded their another friend Sumit, who agreed to contribute the balance fund to open the hospital. They decided to form a partnership firm on the following terms. Amit, Ruchi and Sumit will contribute 2 lakh, 3 lakh and 5 lakh respectively. Means 2 lakh is of Amit, 3 lakh is of Ruchi and 5 lakh is of Sumit. Interest on capital at the rate 5% per annum was agreed. The profit of the firm for the year ended 31st March 2019 was rupees 5 lakh. You have to prepare profit and loss appropriation account for the year ending 31st March 2019, and I have added and capital accounts of the partners here. So the solution to this question is here. We will prepare the profit and loss appropriation account. The net profit was 5 lakh. Net profit brought down to interest on capital. Amit's capital was rupees 2 lakh. 5% of 2 lakh comes to rupees 10,000. Ruchi's capital was rupees 3 lakhs. 5% of 3 lakh is 15,000. And Sumit's capital was rupees 5 lakh. 5% of 5 lakh is rupees 25,000. So total comes to 50,000. Now we will balance the P&L appropriation account. The balance comes to rupees 4,50,000. As in the question, no profit sharing ratio is mentioned. Therefore, this balance of 4,50,000, that is the profit, will be transferred to the partners' capital account in their profit sharing ratio, and when the profit sharing ratio is not given, then it will be taken to be equal. So this 4,50,000 will be divided equally among the 3 partners. Now the partners' capital account, on the debit side, this is the columnar capital account of the partners, where in a single format all the 3 partners account have been prepared. So 3 columns will be made on the debit as well as on the credit side along with the particular column. So here it was given that contributes Amit, Ruchi and Sumit will contribute, means they will introduce the money to buy cash account. It is a new firm. 2 lakh, 3 lakh, 5 lakh. By interest on capital, 10,000, 15,000, 25,000. By profit and loss appropriation account, see here, this was interest on capital, 10,000, 15,000, 25,000, and this is the share of profit, 1,50,000, 1,50,000, 1,50,000. So total comes to 3,60,000, 4,65,000, 6,75,000. On the debit side nothing is there, so this is the balance, and this balance of 3,60,000, 4,65,000 and 6,75,000 will be brought down on the opposite side, that is the credit side. 3,60,000, 4,65,000 and 6,75,000. Now another question. Question number 6A. Page number 1.99. Mahesh and Ramesh are partners with capital of rupees 50,000 and rupees 60,000 respectively. On 1st January 2019, Mahesh gave a loan of rupees 10,000 and Ramesh introduced rupees 20,000 as additional capital. So Mahesh is giving a loan. Mahesh is a partner and he is giving a loan of rupees 10,000. And Ramesh is introducing rupees 20,000 as additional capital. Profit for the year ending 31st March 2019 was rupees 15,200. There is no partnership deed. If the partnership deed is silent, then no interest on capital will be allowed to the partners, but the interest on loan will be provided because the profit has been earned. If loss would have been there, then also the interest on loan will be given. So interest and the deed is not there, therefore the interest on loan will be provided at the rate 6% per annum. Both Mahesh and Ramesh expect interest at the rate 10% per annum on the loan and additional capital advanced by them. Show how the profit would be divided. Give reasons. Give reasons means that you have to show your workings. Now see, we will prepare the profit and loss appropriation account. By net profit brought down 15,200. We will take it in the inner column, that is the particular column. We will show a working note for that is 150. How it came? 10,000 was the loan. The rate of interest applicable is 6% because there is no partnership deed, and in that case 6% per annum is the rate of interest given on the loans advanced by the partners to the firm. So 6%, and this loan was advanced on 1st of January. And we are preparing our profit and loss appropriation account on 31st of March. So the interest will be calculated for 3 months. So 3 by 12 total, and after the calculation the amount comes to rupees 150. So this 150 will be subtracted over here. It has been subtracted because this was a charge against profit, means it should have been shown in the profit and loss account, and it was not shown there, so it will be deducted over here. This profit 15,200 is more than is more because 150 was not deducted in P&L, in profit and loss account. So we will deduct it. So the actual profit is 15,050. Now this profit will be distributed among the partners. As the partnership deed is silent, the profit will be shared among the partners equally. So this 15,050 will be shared among the partners equally, 7,525 each to both the partners. Now see question number 6b. X and Y are partners in a business with capital of 80,000 and 60,000 respectively. The partnership deed provided the following. Number 1, X gets a salary of rupees 600 per month. 600 per month means 7,200 for the complete year. Then it is given Y get commission of rupees 5,000. Interest on capital is allowed at the rate 10% per annum. Interest on drawings is X rupees 500 and Y rupees 300. Transfer rupees 3,000 to reserve fund. Profit be divided in their capital ratio. This is also given in the partnership deed. So the profit for the year ending 31st March 2019 before taking above facts was 49,400. Pass necessary general entries and draw profit and loss appropriation account and capital accounts of partners. So I am only preparing the accounts. General entries you will do yourself. So in this question the net profit is rupees 49,400. This is your profit and loss appropriation account, 49,400. Now on the debit side, to interest on capital. The interest on capital is allowed at the rate 10% per annum. X capital was 80,000, 10% of 80,000 comes to 8,000, and Y's capital was 6,000, 10% of 60,000. Y's interest on capital is 6,000 and his capital was 60,000, so 10% of 60,000 is 6,000. Total comes to 14,000. Two salaries. X is entitled to a salary of rupees 600 per month, so for the entire year it is 7,200. 600 multiplied by 12. Y is to get a commission of rupees 5,000, it is the fixed amount, and rupees 3,000 was transferred to general reserve. Now on the other hand, interest on drawings are given. X capital account 500 and Y's capital account 300. This amount has already been calculated and shown in the question. So total interest on drawings is 800. So we will do the balancing of the profit and loss appropriation account. We will total the credit side, that comes to rupees 50,200. This is the bigger side, and the total of the debit side is shorter than 50,200 by rupees 21,000. This 21,000 is the profit which is to be transferred to the capital accounts of the partners in their capital ratio. Now how the capital ratio is calculated? Calculation of capital ratio and sharing of profits. X and Y are two partners. Their capitals are 80,000 and 60,000. Remove all the common zeros, so it comes to 8:6. Now is simplify 8 and 6 by dividing it by 2, so 4:3. Total of 4 and 3 is 7. 4 divide both by 7, 4 by 7 and 3 by 7, and the profit is 21,000. Distribute this profit, divide this profit in this proportion, 4 by 7 into 21,000 by 7 into 21,000. So the share of profit of X is 12,000 and the share of profit of Y is 9,000, which is being shown over here, 12,000 for X and 9,000 for Y. Now we will prepare the partners capital account. By balance brought down 80,000, 60,000, because in this question the capitals are given. It is not mentioned that the firm is a new one or an old one, so we will assume it to be a old firm. So their capital at the beginning of the year were 80,000 and 60,000. By interest on capital, that is 8,000 and 6,000. It will be shown over here, 8,000, 6,000. By salary, 7,200 is for X, so in X column 7,200. By commission, 5,000 is the commission given to Y, so in Y's column 5,000. This transfer to general reserve has not been charged to any partner, has not been allocated to any partner, so it will not appear in the partner's capital account, and the profit has been distributed as 12,900 and 9,000, and X share was 12,000 and Y share was 9,000. Now interest on drawings for X was 500 and for Y was 300, so X 500 and 300. The amount of drawings are not given in the question, so we will not take them. Now we will balance the debit and the credit side. The total of the credit side for X is 1,07,200, 1,07,200, but in the debit side only 500 rupees is shown, so the difference is of 1,06,700. This is the balance in X capital. It will be brought down on the credit side, 1,06,700. The total of Y will be done, and that total comes to rupees 80,000. On the debit side only 300 is being debited as interest on drawings, so the balance comes to 79,700, which will be brought down on the opposite side, that is the credit side, 79,700.